PA Wealth, an investment services organization. Today in this video, I'm going to discuss what to see when you invest in IT stocks. We all know that IT industry in India is undergoing rapid evolution and changing the shape of Indian business standards. Among other sectors, the IT sector in India has been driving growth for the last decade. And moreover, the sector has the potential to continue doing so for the next couple of years. India has become the digital capabilities hub of the world with around 75% of global digital talent present in the country. Now let's understand some key features of Indian IT industry. To begin with, the first important feature is that it is a growing industry. India's IT industry contributed around 7.7% to the country's GDP and is expected to contribute 10% to India's GDP by year 2025. As of financial year 2020, the IT industry employed 4.3 million people. IT industry is fueling the growth of startups in India with presence of around 5,300 tech startups in India. Secondly, IT sector is one of the cash-rich sectors in the economy. Unlike capital-intensive companies, IT companies do not require much capital expenditure on plant and machinery, so we can say that companies are mostly debt-free. Thirdly, it's most lucrative sector for investments. IT industry in India attracted cumulative foreign direct investment worth 62.47 billion US dollars between years 2000 and September 2020. The sector ranked second in FDI inflows. Another point to consider is that it's cost effective. Indian IT companies are more cost effective as compared to US and UK IT industry. India has a low cost advantage by being 5 to 6 times inexpensive than the US. As a result, Indian IT companies are becoming a preferred destination for IT and BPO sector in the world. It continues to be a leader in the global sourcing industry with 55% market share of the 200 to 250 billion US dollars global services sourcing business in 2019 to 20. Now let's see what are the key parameters for analysis of IT services companies. There are some parameters which differentiate IT companies from each other. Moreover, helps the investor to make good investing decision. The first one is on-site and offshore mix. The on-site and offshore revenue mix refers to the location of the employees of the company. If the number of on-site employees are more, the employee cost will be more. This is because of high travel and visa expenses for employees working close to clients. Therefore, lesser the profit margins. On the other hand, if employees work off-site, the employee cost reduces in comparison. Here in this graph, you can see the percentage of on-site and offshore revenue mix of Infosys and L&T. The second parameter that sets apart IT companies from others is that employees are major assets for IT industry players. IT companies depend upon their employees for growth and profitability. Therefore, efficient management of employees is one of the most essential activities for any IT company. Employee utilization and attrition rate are the basic measures which can certainly help you to understand the employee productivity of the IT company. Lesser the employee attrition rate, more beneficial to the company, as this reduces training costs for new employees because existing employees already know the working of the company as well as clients' operations. The employee utilization rate is the amount of time one employee spends working on client-facing tasks versus the total amount of time that an employee is available to work. The IT companies certainly have to maintain a fine balance between the number of employees working on customers' projects and number of spare employees on bench. Next factor is revenue per employee. It is measure of total revenue for the last 12 months divided by current number of full-time employees. This ratio is used to compare the companies in same industry. It is the indicator of employees' productivity. As higher the ratio, higher will be the operating efficiency of the company. Thanks for watching this video. Please like and comment on this video. Also subscribe to our channel.